Guys, checking in on some of the other retailers that are moving this morning. I kind of hinted at it a moment ago because of the number I couldn't find in my notes, but shares of Dollar General, they're lower by about 7% this morning after missing earnings estimates on the bottom line. The company also announced that they would be slashing profit guidance for the fiscal year by over 5%. So the street's certainly paying attention to that, in addition to the mixed results that came through here. A miss on earnings, but a beat on revenue there, just barely by the hair of the chinny chin chin. So ultimately, it just is coming back to that guidance.
Yeah, it's coming back to the guidance, and it's coming back to margins, right? Because as we have talked about, right, companies like Dollar General are going to get more traffic at a time like this. People are trying to save money. However, if input costs for Dollar General are still high and it's trying to keep costs low, in other words, it has less pricing power, it sounds like, than some of its competitors, and maybe less scale than, say, a Walmart, in order to try to maintain at least some margins to some degree. So the company says, as a result of these greater than anticipated gross margin pressures, which we believe are temporary, but will continue to a lesser degree through the fourth quarter, the company, that's why they were cutting their forecast here. So that's what was going on there. Big Lots, by the way, also reported, and this is another discount retailer, right? Comp sales there were just out and out down by 11.7%, which is a steeper drop than estimated. Gross margin coming in at 34%, which is a decline of nearly 5 basis points year over year.
Yeah, just briefly on Dollar General, since I gave a deep tease to some of the inventory numbers
yes,
there.
Please.
Yeah, there was an increase of about 28% on a per store basis there. And so that averaged across the total merchandise inventories there. But $7.1 billion compared to $5.3 billion in this same period last year. And so you've got increased inventories. You've also got a company that's still going to continue to open up more stores here, too. So that's a significant cost, and that's going to compress, again, margins, to your point a moment ago.
Yes, all about inventory and margins still.